Welcome, good afternoon traders. My name is Tomasz Wiśniewski. I'm a Chief Analyst in Alpari Research and Analysis, and welcome to a daily analytical report. Last day of this week, but we're not finishing trading right now as usual, but we're waiting for Janet Yellen. Janet Yellen has a speech in I guess in 6 hours in United States. And it will be very influential. Why is that? Because this week we had a major switch in the perception and the anticipation of possible rate hikes in the United States. Right before this week, chances for a rate hike in March were around 40-50%. But now we're close to 100%. It's around 80-90%. It depends from the method of calculating that, but it's almost certain. It's around 80-90, as I said. And it's due to the Fed speak that we had this week. So there is a major switch in the anticipation of interest rate hikes in United States. So Janet Yellen will be creme de la creme today. We're waiting for the most important person in Fed to confirm or deny those statements from other Fed members. Also, from the fundamental point of view, what do we have is really not much. We had a huge drop on silver yesterday. We breached the short-term midterm uptrend line. It's not spreading around, right? Gold is also weaker, but not significantly. And from the fundamental point of view, let me show you the calendar, what we should expect today. So we are still waiting for PMIs. We got PMIs from Eurozone, which came worse than expected, but still a great number, 55. 55, you have to admit, it's a great number, so European traders shouldn't complain, and that's what's happening with Euro right now. Euro is much stronger at the moment. Almost to all currencies. What we will have also today is Baker Hughes US oil rig count, which can be influential for oil. Yesterday on oil, we finished with a very big drop. Now we are hanging above the lower line of the side trend, and we are waiting for a possible breakout. As always on Friday, now let me show you important events in the next week. So we start with interest rate decision in China, also with a pack of data from Australia and New Zealand. Retail sales will be definitely important for the traders on Australian dollar. On Tuesday, what do we have is interest rate decision by Reserve Bank of Australia. So first 2 days will be important for Australian dollar, and also we do have a GDP in Eurozone. Wednesday will be relatively there will be lack of important data. We should be under the influence from the trade balance, import-exports from China, which will be posted before the European session at the end of the Asian session. Also on Thursday, what do we have? Well, as always, that will be the first Friday of the month next week. So on Wednesday, we do have an aperitif of non-farm payroll. So we do have ADP employment change. So for the same number from the private company. On Thursday, interest rate decision from Eurozone. So it will be all about ECB On Thursday, we will be anticipating what they are planning to do. Also, a press conference. Press conference is always influential on the price of a euro. And on Friday, I can see that we do not have. Why we do not have it? Next week, yes, we do have it. I need to change the calendar. So the next week we do have non-farm payrolls, obviously. We do have an unemployment rate as always, and also the same pack of data from Canada. So we cannot complain about the number of about the amount of fundamental data being published next week. So brace yourself for an interesting week. Okay, we can take a look on the charts right now because there are many interesting setups. Euro to Australian dollar. That was our trade of the week, actually, on our newsletter that we sent to our Nigerian customers. Let me tell you a little bit more about Australian dollar to about euro to American to Australian dollar. What we had here is this long-term support, which was attacked twice and the price created two pin bars. Right, so a candlestick with a long tail, candlestick with a long tail. This on a daily chart and H4, maybe H4 will be better. This created a double bottom formation. So that was a very good optimistic sign for buyers. But before retracing, before a bigger upswing, the price created a right shoulder. So instead of a double bottom formation, we got inverted head and shoulder formation. And that finally, yesterday, the price broke the neckline, which helped buyers to gain momentum. When we see on the H4 chart, it's pretty remarkable that we have 1, 2, 3, 4, 5 H4 candles, then one correction, then four bullish candles again. They gained momentum, which helped to break the midterm downtrend line. So now the sentiment here is positive. Where do we anticipate that the price will go? Where is the closest midterm resistance? In my opinion, it's here. So after our we were talking about the possibility of a long position here. Now we are 160 pips higher, and the potential movement should give 280 pips. So from current position, it's 120 pips more. Right, this is our outlook on euro to Australian dollar, but with such a strong upswing here after the trend line, there is a risk of a correction. But in general, the sentiment on euro to Australian dollar is positive. Finally, because we are highlighting this possibility here, here, and finally we are higher. Next instrument on today's analysis is also this one from yesterday from Trading Sniper, and today as well. Euro to Japanese yen. After an upswing, we created a wedge formation. Wedge ended with inverse head and shoulder formation with a breakout of a neckline. Breakout of a neckline helped to gain the momentum as well to break the upper line of the wedge. We got an upswing, then a small correction, then an upswing again. So what is our outlook for this pair in the forthcoming few days? Our outlook is the price going 60 pips higher, at least 60 pips higher, where the price will meet first horizontal resistance created by those supports from here. Broken support becomes a resistance once, twice. and probably will be tested again. If they will break this resistance, the next one is the green line connecting recent lower highs. Our scenario is the price getting to the first resistance, and what after that we will see. We'll keep you updated definitely on our trading sniper videos or daily analytical reports. I hope that you watch both of them, daily analytical report and trading sniper. Silver. That was brutal what happened with silver yesterday. Yesterday we were in this pennant formation and we said that whoa, that silver is pretty resistant to the stronger dollar. Silver was much stronger than gold as well, and something snapped. There was a huge downswing that retraced movements from almost whole February, right? Because here we have an upswing from 10th of February. So during one day, many profits vanished. Why? Well, I didn't find a lot of explanation what happened. That was probably a stop loss action as well. It happened on a relatively high volume, so it wasn't a bad tick or a fat finger using lower liquidity. It happened after the European session closed, so someone who wanted to do that wanted to wait for the lower liquidity. And well, this is not a disaster. Why it's not a disaster? Because as you can see, the uptrend was strong, and we just retraced 23.6 Fibonacci level. 23.6 Fibonacci level is not a tragedy. Even 38.2% is not a tragedy. The price most probably will test the neckline again, which is slightly below 38.2 Fibonacci level, and here we'll have to check what's the sentiment here. So far they broke a short-term uptrend line, well, mid-term uptrend line, which was present there for 1 month. Now we are testing a mid-term uptrend line, but slightly bigger from 2 months. As you can see, it caused the price to at least it caused a pause here. And the next support is located here between 38.2 Fibonacci level and a neckline, right? Now gold. Breakout on gold and a downswing on gold wasn't so brutal as on silver. That retracement was focused only mostly on silver. Gold dropped because of the correlation, obviously, but it's all associated with also with a stronger American dollar. So what we had here was first the price stopped above 23.6 Fibonacci level, and then they broke it, and now we stopped above the level created by the correction equality movement. Let me also take those yellow lines, because there is no correction equalities from those yellow lines, but what I want to do is here show you that this support is a correction equality movement. This correction is the same as this one, and also the support from 21st of February. So actually yesterday we highlighted possible places for a bounce, and look at that. Here the price bounced a little bit, here the price stopped a little bit, but we didn't say that on those levels the price will retrace. You always have to wait for the price action. That's what price action is. You wait for the price action. You wait for the pattern which price is about to make or will make, and then you decide if you want to buy or sell. If there is no bullish reaction here, if there is no bullish reaction here, you shouldn't go long. If there will be a bullish reaction, you can consider going long. So we are waiting. Well, in our opinion, the support will be broken, and the real battle will happen here on 38.2 Fibonacci level on this third X. We will see what's the sentiment there. Australian dollar to American dollar. Also, Australian dollar is correlated with silver and gold very much. And this pattern of 12 the same corrections in a row is finally over. We removed those corrections. I remind you that from the beginning of the year, the price was making mostly 70 pips corrections, more or less. They finally reached a long-term horizontal resistance here on 0.774. The price broke mid-term uptrend line here and went significantly lower. We broke 23.6 and now we're aiming for 38.2. Is 38.2 important? Always is, but here it's also supported by lows from the October, highs from middle of December, after the breakout lows from the end of January, right? So 38.2 here in this case will be very significant, and we shouldn't be surprised if we would get a bounce here. But again, before making any trading decisions, it would be wise for you to wait for a reaction on those levels first before doing anything. Right, so far in the short term there are bigger chances for a drop, but we are not far from the first potential support, which is 40 pips lower, and that's a potentially very good place to create a support and to create a defense and a possible pullback. British pound to American dollar, also huge drop. American dollar is very strong. We marked this support. This support resulted in a pause. It was relevant. As you can see, the price couldn't force it for some time, for the whole day yesterday and till the beginning of the European session today, but it finally snapped and we do have another leg lower. It's hard to tell where is the potential support on the next potential support. On our daily analytical report we highlighted this level as a potential support, but we will see. Sentiment here definitely is bearish, and that's how false breakouts usually ends. Like here, this false breakout. You remember that because we are talking about that for a long time. Euro dollar. Euro dollar finally, we said that they will test this support. Actually they did, maybe just a little bit bigger, higher, like here. They tested the support, they bounced from the support, so we can see that American dollar is very strong, right? But euro is stronger today, which you can see here or here, right? So when you combine, look, we combine two strong currencies. Here on those pairs, euro is strong, very strong. On Australian dollar to American dollar or on a cable, you can see that the dollar is strong. So what happens when you combine two very strong currencies? This time euro wins. This time euro wins and is prepared for a further upswing. The closest resistance is located here, the closest support. And here, once the support will be broken, the price will have open road for those lows, from the December and from the January. New Zealand dollar to Japanese yen. Maybe we finally have a trading signal. So there is on New Zealand dollar to Japanese yen this resistance, very clear, right? Everybody sees that. That's a double top formation touching the resistance. Double top formation has its own support, which is quite clear in this case. Support, 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 support. And we finally have a breakout. But there is no stronger decline here, so we're having now a retest of this level as the closest resistance, and we have to wait for the price action. If the price would make new lower lows, that would mean that the test was positive for sellers and we're ready for another leg down. British pound to Canadian dollar, even with the very weak British pound, Canadian dollar is not stronger. So our buy signal from the bullish engulfing from the weekly chart from the beginning of the year is still on. It's still present on the chart. At least as long as we stay above this horizontal support here. Australian dollar to Japanese yen. What do we have here? There was this breakout of this wedge, and it didn't go as planned. We were thinking that this uptrend will be continued, but the weakness of Australian dollar is very strong at the moment. The sentiment is still positive as long as we stay above this uptrend line, but it doesn't look good, right? So it wasn't a good idea to go long here. Luckily, we didn't use that for our live trading account. Euro to Canadian dollar. Euro is doing very good here. We were here yesterday. We stated that as long as we stay below the green line and above this line, the sentiment is neutral. It will be positive once we'll break the green line, and we just broke the green line, so the sentiment should be positive as we stated yesterday, and actually it is positive. Australian dollar to Canadian dollar, when we combine two weak currencies, we can see that well, today it's mixed, right? Yesterday Australian dollar was hit badly. We may think that it also had an influence on the silver. But today the sentiment is mixed, and actually this instrument is not tradable for today. Canadian dollar to Swiss franc, we got a breakout, which actually in theory it should trigger the sell signal, but we have to wait if that was not a false breakout. So far it does not look promising, because straight after breakout we do have two hammers. So this creates an opportunity for a false breakout. You know how to use false breakouts. So I would say that once the price would come back here, that would be a positive sign for buyers, and you could use the false breakout pattern for your profit. Let me remind you how false breakouts can be lethal. Here, false breakout punishment. That's how false breakouts work. Okay. Next instrument is Canadian dollar to Japanese yen, where we also can think about false breakout that we highlighted yesterday. Right, so the price broke important horizontal support here, created a false breakout pattern, and then went above the support again. So this also can be a profitable setup for buyers. British pound to New Zealand dollar, here we are waiting for a breakout. and this breakout will be is happening on a very important resistance, because look here, support, 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 resistance, 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 and resistance. So here in this place we do have a combination of two resistances. First one is a horizontal resistance, and the next one is a upper line of the symmetric triangle formation. So a breakout here can give the price momentum to go at least here. So if we will look on H4 chart, that creates an interesting buying opportunity, because once you will go, for example, long here, you can think about stop loss here, 130 pips, and the potential profit is 3 to 1, 3 to 1, more, even slightly more than 3 to 1. American dollar to Mexican peso. Here is an interesting setup where we do have a broken support becoming a resistance. Support, 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 broken support became a resistance. Now the price went slightly higher and they wanted to test that level as a resistance, but they failed. And now we have a punishment. We have a time of a punishment. The price is advancing lower, significantly lower. And oil and DAX. This is oil, and as you can see, the price is falling down after they try to break this horizontal resistance on $57.4 per barrel. We are now testing this lower line of the side trend. This price action here looks like a preparation for a breakout, right? This line looks like a preparation for this sentiment. This price action looks like a preparation for a breakout. But thing with oil is that even if the technically it looks bearish, most probably they will continue this boring side trend. And last but not least, DAX, which on Wednesday made new highs. Yesterday was pretty flat. We were waiting for an action, but we didn't get any. Today we opened with a bearish gap, which was probably welcomed with open hands by buyers because with this sentiment and with this attitude with traders, they know that the gaps like to be closed, and they would be buying anyway. So even if they have a technical signal from the gap that likes to be closed, they should be more than happy with the price action, and they use this opportunity, right? So they opened lower, they aimed for the gap closing movement, and everything is back to normal on stocks. It's just how the situation is on the indexes. Remember, we do have Janet Yellen today. Market can be very volatile at the end after the European session will close. Watch out for that. If you're planning to leave the position for Janet Yellen's speech, I don't think that's a good problem, especially if you're a beginner trader. If you just started to learn, that's a good idea to watch what's going to happen when she will be speaking. But without a position and on a demo account, you will experience the higher volatility and you will see some unpredictable movements which are far from the technical analysis. Now a short break, and after that webinar about MetaTrader 4, but before that remember that trading and investment in financial markets involves an element of risk. And also for the latest information, please do follow us on our Twitter account and our website talpari.news. You will get a very good trading, our trading view on many instruments, and believe me, it works. Thanks very much and goodbye.